Thank you for being here. Very happy to have my esteemed speakers on this panel. We'll be discussing today the role of private capital in enabling the transition, the role of financing mechanisms, technology, innovation, starting with George. So it's going to be an interesting discussion covering in this 40 minutes. George, my first question is to you. So the region is heavily investing in hydrogen, such as the NEOM Green Hydrogen Company, right? How mature is the technology for large-scale adoptions, and what's the role of private capital in accelerating its deployment?
Hello. All right, it's working. So thanks, Patil. I mean, yes, the region is in fact investing a lot, and I think that also stems from the fact that they do have a competitive advantage, whether it's because there's cheaper solar renewable energy, there's ample availability of land, and also it's quite well connected to be able to export hydrogen. I mean, their focus is really on an export market for hydrogen. Now, the technology, specifically green hydrogen, is developing, but it's not at its full scale of maturity yet, which does raise some risks, specifically when it comes to giving lenders the confidence to invest in projects like these. And I mean, this really stems from that the technology still needs to be worked on, and the efficiency rate of green hydrogen, the transportation of hydrogen and its use as a feedstock or as a power generator, as a power source, still needs development. Now, when we talk about investing in green hydrogen, it requires quite a bit of capital, and that's because you're investing in the renewable energy part of it, you're investing in the electrolyzer, you're investing in the transportation infrastructure, etc. And across, if you look at it as a whole, yes, it is quite a risky investment. But what is helping, specifically in the region, is when you have specific offtake agreements for the hydrogen that you're going to produce. A very clear parallel to this, honestly, is the development of sustainable AI data centers, right? When you have these data centers that are being developed by the hyperscalers like Microsoft, Meta, Amazon, etc., they come with a specific offtake agreement. The offtake agreement gives a lot of revenue, committed revenue share, let's say, or revenue flow, which gives confidence to the investor. So I think one of the key things that will help promote capital is the fact that there is a committed interest in buying the green hydrogen that's being produced. And that is the same thing that's happening with, AI data centers, which are an even bigger financial investment, I would say.
Thank you. Chirag, innovative financing mechanisms are critical in scaling investments in renewable energy projects. And we've seen in the region, particularly UAE and the Saudi, a surge in green bonds. My question to you is, what financing mechanisms, blended finance, green bonds, have been the most effective in scaling climate investments in the region, attracting private investors to different renewable energy projects such as the Aqua Power or the Shua Energy? And if you can share examples of those projects.
Thanks, Patil. I think to take a slightly different approach to the question, when we are considering sustainable finance at Standard Chartered, I think one of the core areas of looking at the financing side is very much how can we bolt on sustainability or sustainable finance to our existing set of financing instruments. So as a bank, we have over 40 product variants, across use of proceeds, sustainability linked, across the different sectors that we're covering, across industries, across sectors. And I think it's really important to understand that when we are issuing a new loan or a new bond, it should be in the construct of what the client is ultimately looking for, and then looking to add on a layer of sustainability to that aspect. So it's not about can we fit through a green bond just because we want to do a green bond. What is it ultimately that the client is looking for initially? Do they typically access in the debt markets? What type of debt are they typically issuing? What have they done historically? And then can we introduce a form of sustainable labeling as an introduction to that aspect of how they come about or how they approach sustainability or sustainable finance. Ultimately, we want to enable companies that are already investing in sustainable activities to ultimately highlight certain commitments that they're making, further embed ESG across their operations, and to create a reference point for themselves. And ultimately, with many of the businesses that we're working with, we're looking to introduce an expanded liquidity pool as well when it comes to investing in some of these technologies. I think you've touched upon the NEOM green hydrogen project, and I think that's a really, really good example, a milestone in many ways for the Kingdom of Saudi Arabia. If we talk about just the numbers, it was an $8.5 billion project, over $6 billion raised in the debt markets. It was supported by over 20 international and local banks. In terms of the emissions rebatement, we're talking about up to 5 million tons of CO2 being saved per year compared to fossil fuel alternatives. And ultimately, we're supporting a sector which is already fossil fuel intensive, carbon intensive in terms of the logistics and transport sectors. So we're talking about a construct, we're talking about a financing that end to end is going to deliver a number of sort of milestones, a number of highlights when it comes to the region, when it comes to Saudi, and also supporting Vision 2030 as well.
Thank you. Yeah. In terms of credit assessment, it's also one of the key factors that investors look at to look at the company's financial health. How is credit assessment nowadays integrating sustainability factors into the overall process, and how is this informing investors in their decision making?
Thank you, Patil. So in terms of credit, and that's the area where I'm more comfortable with, we look at that from different aspects. So mainly, if we look at how the governments are incorporating this into their frameworks, so we see, as we've heard earlier, the commitments of Vision 2030 or the Net Zero 2050s, or most of the commitments we see in the GCC led by mainly the UAE and Saudi Arabia leading the pact when it comes to their commitments, and that cascades down from the government's commitments to where the corporates and the banks are faring in that aspect. So looking at how we integrate that into credit assessments, so we have many tools that really tell the bank how to better integrate the ESG scores, the ESG factors when facilitating credit to their clients, whether they're corporates or infrastructure projects that are popping up in the region, whether it's solar panels projects or whether they're green buildings, being more efficient and getting certified from a green perspective. That all adds to the credit worthiness scores of those corporates. So when the banks wants to finance now any corporate, one of the questions they're being asked in the underwriting process, any ESG metrics that they do have and how do they fare. And that really is becoming slowly more and more integrated into the credit process end to end, from an origination point of view to the pricing also of credit. So once the credit scoring is done internally in the banks or a corporate is applying for credit in the banks, what is the actual pricing of credit are you getting? More sophisticated banks as well and and basically corporates in the region are integrating this even further down. So tackling this into stress testing frameworks, trying to understand how many of those corporates or banks will behave down the road 10, 20 years. Those questions were not asked in the region earlier. And what is the actual sustainable business path for this corporate down the road, even if they operate in a green field or in a brown field? What is the different nuances between those corporates, and how serious are they taking their carbon diversifying away from carbon? What are their actual transition plans, and how really rigid and deployable are those plans on the ground? And therefore, because they are aware now that this is really becoming a factor in your credit worthiness and applying for credit and sustaining your credit lines and maintaining fair interest rates as well that you're being charged for, given that it's a metric that is being integrated, whether from the investor perspective or from creditors' perspective, or from an overall reputational perspective.
Thank you. Pavel, the renewables now dominate the green investment world. Based on your experience in working in the region and different sectors, which sectors beyond renewable energy do you think has opportunities?
Thank you, Patil. I think it's a very good question, and I think very important for everyone to be honest these days. So energy, as you said, is obviously important for everyone, right? But what's growing beyond that? I think so today is obviously the first working day since the holidays, national holidays, 53 years of growth here in the UAE. And you can see that growth is driving everything. So you mentioned agriculture. Obviously, we've seen a huge influx of expats and growing population over here. So that's driving agriculture from the standpoint of growth in population. But outside of that, it's also we're realizing that agriculture is strategic importance for a country. So that's certainly one of the growth areas in the region. And without specific water supply, you can't sustain the growth of the population, and obviously need to feed other sectors. So sustainable water management is definitely a big thing here. And then sustainable tourism as well. These are sort of probably the three obvious ones, because as the region is growing, more people get interested over in this lovely weather, so they're coming over here. And these three sectors driving everything else. If we think beyond these three sectors, it's literally in every single industrial sector and consumer sector has got a space for green transitioning. Think about transportation mobility. We're traveling through Dubai, we'll see loads of hybrid cars. We're seeing EV vehicles, almost every single one now. So, and then these sectors are also driving the industrial manufacturing complex as they're looking for new batteries, more, you name it, green buildings. It's all driving all together. But I think what really sort of, and I guess this is the problem with private capital, because of that being private, you cannot always track it, and the private investors also do vary in size. So how do we track them? Well, if I twist it slightly, look on a different side, Noor mentioned credit ratings. Previously, investors needed a credit rating if they wanted to invest into an opportunity, and they were driven by a placement party. Well, now these days, we're also seeing a huge rise in ESG ratings. And these are quite interesting ones because there are different types of them. And some of them you apply as a company, but the others are driven by investors. And that really opens up our eyes in terms of which opportunities in which sectors have got an interest from a private investor. So specifically, within the UAE or GCC in general, the first sector that we see growing on from that perspective is banks. People want to invest in the companies that understand that, how money works and operates. So there's, if I look at the ESG ratings across the UAE and Saudi Arabia, the biggest group of those companies is banks. So, can I say that, private investors are looking to invest just into banks? No, that's not true, because all the industrial companies that support the growth within the region are also seeing a huge rise in the ESG ratings that are driven by the investor population. Thank you.
Thank you. Vijay, mitigation is often prioritized over adaptation, and both are equally important in the transition, and both need equal amount of capital in this journey. How has adaptation played a role, in ENBD's sustainable finance initiatives? Or, in other words, how is ENBD supporting adaptation?
Yeah, thanks, Patil. I think you're completely right. I think most banks, including Standard Chartered and all of us here, really concentrate on mitigation, net zero transition. I think that's the way in which a lot of the rules are made. I think now we're in that phase of adaptation to climate change. I think everyone here, we saw the storms earlier in the year as well. We saw the rainfall, historic rainfall. And it's interesting, you go around the world, you talk about the rainfall, people still believe it's due to cloud seeding. That urban myth is out there, but I think climate change is here to stay. So for us in Emirates NBD, and I think when we think about that, adaptation finance, infrastructure is the first one. Urban infrastructure changes. So we finance a storm drainage system. We've worked with the UAE government as well, looking at that storm drainage, looking at predictive models for climate change as well, and also working with MOCA as well to where to put that storm drainage. Because actually, we can see with the climate models as well that rainfall patterns are changing, temperature patterns are changing, the urban infrastructure needs to change. So in the UAE, that's been a real concentration for us as well. Now that actually goes into our lending criteria of where we also lend towards adaptation as well. How is the climate going to change? How are the supply chains going to change as well? And also within Emirates NBD, we also own Denizbank, which is in Turkey. They are the largest agricultural bank in Turkey. We offer something called a producer card for our farmers. Now that producer cards offer them to freeze their loans if they hit challenges. More and more of those challenges are because of climate change. Now, the reason I'm talking about that is that we're really concentrating on infrastructure finance. We're now starting to turn the needle and look at SME financing as well. And a lot of those farmers are freezing or asking to freeze on their loans to buy more irrigation. Why? Because of climate change as well. So actually we're seeing across our whole product portfolio that adaptation. When we start asking the questions to our clients, they're starting to ask for more adaptation finance. I think the third area we're looking at is blended finance. And I think a lot of this talk about, and we've just come back from COP as well, there needs to be more finance. I think what people mean is more cheaper finance. Now, and I know that's difficult for Standard Chartered and ourselves as well, because actually that margin needs to come from somewhere. So I'll give you a practical example. If we finance an EV at a lower rate, that rate needs to come from somewhere. We need to subsidize it from somewhere as well. And it's the same for adaptation finance as well. So we're now starting to talk to Emirates Development Bank, EBRD, the World Bank as well, around more adaptation financing as well. And I think having gone to so many COPs as well, we need to increase the financing. We need to increase that development finance and that blended finance at a lower rate so large infrastructure financing can come down as well.
Thank you. Chirag, my question to you is balancing financial returns with sustainability-linked outcomes could be a challenge, and desalination, is often considered an adaptation measure. Or even, clean transportation. So how does Standard Chartered ensure that, projects like this are bankable while meeting and there's ESG criteria?
Yeah, thank you. And just actually building from the point that Vijay was making, I think it's interesting and important to highlight that when a bank is looking at the bankability, the scalability of a project, it's not just the ESG criteria that is taken into consideration. A bank still has a credit committee, a bank still has returns thresholds, a bank still has a business committee. All of these aspects need to be met and met well in order for an issuance to be supported by a financial institution. And I think that's really important to highlight. So when we're talking about the ability and the expectation when it comes to assessing new projects, it needs to be taken into consideration not just from a sustainable lens. Sustainable is obviously of growing importance, and financial institutions right across the GCC now, irrespective of size, have their own working groups, their own reviewing committees, and are very much embedded in the review process alongside the credit discussion on a transaction. But I think it's very important to balance the financial returns, the kind of relationship expectation with the ESG aspect of the review. Kind of honing in on the question, I think one area that we're spending a lot of time with our clients on is the development of sustainable finance frameworks. And the reason for that is really to deliver and to develop a set of parameters that clients can actively look to. It's expected to be a dynamic document that the client prepares alongside their sustainability coordinators that ultimately marries their commitments from an ESG perspective, the good work that they're already doing, the initiatives that they're already focused on, their longer term ambitions, but equally and probably most importantly from the Treasury perspective and from a CFO's perspective, to marry those ESG objectives with their financing plans. What is upcoming in their pipeline that they're looking to finance that can be potentially marked as sustainable, as green, as social? And it's with the help of the banks from a sustainable coordination perspective that they can help define and draw parameters around some of those eligible criteria, so that when it comes to the bankability of potential projects, when it comes to raising a new syndicated issuance, a company knows from the outset that if they wish to raise a green loan, they know that there are a certain set of metrics that they need to meet that can be qualified, or that would qualify as green or as social, and that which banks, investors, institutional investors ultimately can take comfort from, that they have this document that speaks to all parties in the market and ultimately has been blessed by a third party in the form of a second party opinion. We worked on one very recently with Etihad Rail, to Patil's point around the transportation sector. They were doing a lot of work, they're doing a lot of work with regards to the electrification of the rail network right across the UAE and sort of broader GCC as well. And it was really about aligning some of those infrastructure-related investments with their potential plans from a financing perspective. And we were, as I said, we were able to play a role in that. Desalination plants, again, probably get a little bit of stick just in terms of the technology and some of the fallout from some of the project financing that we have seen in previous years. The way that we, again, come around to get support, to garner sort of comfort with regards to these projects is very much around obtaining second-party opinions, specifically on the project itself. And companies like Aqua, for example, that we work with, on a very regular basis, are very happy to pay that cost to obtain the opinion, and therefore to provide that comfort, to provide that blessing, to ensure the banks coming into the facilities are supported and are happy signing across the facility agreements.
Thank you. George, the different technologies out there, including energy storage, hydrogen, they definitely have a lot of opportunities, but decisions need to be relied on data. In your opinion, what role does data play in identifying those opportunities, and why is it crucial for private investments in our region?
Yeah, sure. Not to sound too generic, but of course data is extremely important, and it's actually increasingly becoming one of the more important levers when it comes to decision making. And something that's important to keep in mind when it comes to data is, on one hand, capturing the data, but then on the other hand is what you actually do with the data that you've captured. And when we talk about data, it's important to, in that context, of course, it's important to segment it into 4 or 5 different categories. So you have market data. So here we're talking about general supply, demand, market dynamics, costs, financials, etc., which, there are different sources for it. We at S&P are very rich in data. We have research teams that are specifically focused on coming up with this data. But what this does is it helps decision makers in the very onset of a project determine whether this is a viable project to go for. This is something that is worth pursuing to begin with, because if the opportunity isn't there, you're never going to go through with it. In addition to market data, you have the technical data, basically. And this is where it goes a bit beyond just whether the technology is there or what rating does the technology readiness level have for a particular technology, but it also extends into what are the costs associated with it, what are the efficiency rates, what are the projected efficiency rates for it, new technology that's coming into play. And this is where, with the advent of AI, it's becoming extremely crucial to have access to this data. Just one example, for instance, is Shell partnered with NVIDIA to develop an AI platform or an AI tool that actually reduced by almost 10,000 times the time that it needs to process where and how to do carbon capture storage facilities. All right? This is just one example of using technical data to help improve, let's say, and make the process even more efficient. Now, in addition to this, of course, for you to make a very well-rounded decision, you have to look at regulatory data, you have to look at financial data, and finally, you have to look at risks and doing the proper risk assessment. And this is where, on the policy regulatory side, you have different think tanks that come up with policies. You have tools that scrape all of the different policies, regulations, the reason behind them. And then this is what can help you promote an investment. So for instance, policies and regulations related to creating a more hospitable environment for foreign investors, which is something that we've seen in Saudi Arabia is an extremely important topic. Without access to this knowledge, whether it's developers, energy developers, whether it's lenders, potential investors, they will not be able to make a very well-rounded decision regarding this.
Thank you. Pavel, what is your perspective on the role of digital tools and fintech on transforming how private capital engages with green projects?
Yeah, I won't repeat what Georgia said, but obviously I think it's crucial that we're going to see sort of a big impact on how people make decisions about their investing, especially within green projects, and what role the fintech and digital tools are playing right now is probably quite different to what it will be playing in the future. I think right now we're seeing sort of a huge rise of different startups trying to collect the data that's related to climate change or the company's contribution to that. But I think the problem with that is because there is so much a huge number out there, it's making it different for investors to compare them between each other. So unless you have one company that's got all the information from all the businesses and you can benchmark against each other, then your decision process is limited to one specific tool that's got, say, for example, 10. And then how then you compare them between the two. So I think we go in that history again to where the ratings or how did companies used to assess companies in the past. And that was, credit rating agencies who would issue a credit rating to a company, and then even though they have different scale, you can compare them to each other. Now, back in the days, financial worthiness was an important factor of each individual company. Now, as we've moved into the world and facing new issues such as climate change, we realize that it's not just credit worthiness that's important, but as an ethical being, we're looking for businesses that have a minimal impact on the world, or perhaps even making it better. Now, how do you compare them against each other? Well, I hope that in the future we will have that one tool where we can look and see what's the carbon emission of that product that we just bought, and maybe there will be a blockchain that we're able to trace it all the way through the supply chain. But just right now, we're simply not there. We're seeing companies, and we're helping actually them, a number of clients, to figure out what's scope 1, what's scope 2, what's scope 3. So I think there's a huge journey ahead of us in learning in terms of how we understand the carbon emissions, the greenhouse emissions, before we go into tools. And I think right now what really increases transparency for private investors who don't have the time to look into each individual company compared to each other is look for tools to give them that benchmark comparison. What's the score of this company on the green scale, for simple terms. Now, that may be an ESG score, there may be something else, but we've certainly seen that more and more investors are signing up for principles of responsible investing and looking for the companies that can support them in their vision. For lack of anything else right now, this second, I think it's a very good opportunity to look at the ESG ratings and say, okay, this is the best tool that we have right now, but we should not stop in developing this tool going forward.
Thank you. Vijay, public-private partnerships are very essential to bridge the gap between the public needs and the private investments. Again, what role is ENBD playing in bridging this gap, both for large-scale or small-scale projects?
Yeah, I completely agree, and I think with us really, if I look at a UAE away from financing, UAE government's provided a blueprint for how Dubai and Abu Dhabi are expanding. That's crucial for us as financiers to understand the urban infrastructure, the transport infrastructure, as well as the net zero goals as well. So we can see that Dubai is becoming more urbanized, even more urbanized. The metro system is expanding as well. And actually, there are net zero goals that go into transport on a lot of that urban infrastructure and development as well. So that's one way in which I would say in the UAE public-private partnership, we're involved in a lot of those, discussions as well of how to finance some of those projects as well. I think on the other side, when we talk about public-private partnership, we always talk about blended finance. We're yet to see that scale. So we do take a part of a lot of working groups with the World Bank, IFC, with EBRD as well, with Emirates Development Bank as well. So we do finance, development finance as well, or pre-commercial finance projects as well through those channels, particularly in Egypt, particularly in Turkey as well, and some emerging economies. We would like to see more, especially in sustainability and net zero as well. I think the other way in which we're looking at it as well is that some technologies as well. A lot of the technologies like hydrogen need to be scaled, and that's another area where we ourselves as a bank are interfacing with public enterprises, universities, research institutes as well to provide innovation finance as well to see that those technologies scale up. We do need to see more of that as well. So we need to also see more risk sharing as well of those technologies, scale them up. So what I would say, if I'm honest, it's a work in progress. It's very much a work in progress, but it's one which each bank is sharing risk, each institution is sharing risk, but we need to see more as well.
And what are some of the biggest challenges, that you're seeing in structuring effective public-private partnerships for climate-focused projects?
I think if I give an example with, say, sustainable aviation fuel, we're seeing targets of 1%, 2%. Actually, those targets need to raise. A lot of the targets for a lot of the technologies need to raise and need to scale. But also, we need to be honest of where we're not going to hit some of those net zero trajectories as well. I think some of the challenges, and look, we just come back from Baku and COP. People have COP fatigue as well because big numbers are promised, huge numbers are promised. People say, we haven't really hit that. Year after year, countries make commitments. Actually, when we talk about finance as well, and Chirag, you'll join me here as well, people always think about bankers. A banker is always your best friend. It's something that no one ever says.
We like to think so.
Yes. But actually, when you look at finance, it's often government finance that is being made at COPs. It's national financing at a non-commercial rate. And I think what we're asked as banks is to make, and you alluded to earlier, we have to make a return on investment as well to our shareholders. We are pushing this as far as possible. But a lot of the commitments for COP need to be lower rates of finance or grant-based finance. That's really what's asked for financing. That's something which your bank can't do. What we can do is try and scale. And we are trying to stretch that dollar, dirham, pound, dollar as far as it can go. We have all made sustainable finance targets as well. And I'd say, year on year, there's probably a 20% growth in sustainable finance across the board. And Chirag touched on a really good point, helping clients with framework strategies. I think that's been a really successful goal of all the banks, and that's going to continue to develop. Helping clients with their transition to net zero, I think that's incredibly, successful. I think where we've collectively not been successful is blended finance. It's working with the World Banks, the EBRDs to stretch our finance. And that's because of the structure of the World Bank and the EBRDs of the world. It takes 5 to 10 years. I think an area of development is the carbon markets as well. The Article 6 rules have just been made at COP, and it's really fantastic. It just took a decade to do. We don't have many decades left before we hit 2050. So I'd say the pace of this also needs to increase as well.
Thank you. George, what are some of the emerging technologies for adaptation and mitigation out there, and what's the funding requirements, financing requirements for it?
So, just to add to what Chirag and Vijay spoke about this, there are certain elements, let's say, of adaptation that people tend to forget are actually there, even before you talk about future technologies. For instance, the upgrade of infrastructure is one of the key elements. I know, Vijay, you gave an example of last year with the floods and the rain, but developing bridges, more resilient roads, developing coastal defenses are all a big part of adaptation measures. And I think there are estimates that probably put around a $7 trillion or an $8 trillion investment globally into that particular type of adaptation measure by 2030. Water is another one that we spoke about, desalination, but then it goes beyond desalination as well. And that goes up to, estimates indicate around $23, $24 trillion are needed by 2050 in order to adapt the water infrastructure to the expected changes in climate change. Another one that people tend to also maybe overlook on the mitigation side is the nature-based solutions. So here we're talking about deforestation, reforestation, mangrove planting, etc., which is also quite an expensive undertaking, estimated also around $11 trillion or something like that by 2050. It's great to know that you can actually plant this speaker card. If you read it on the back, apparently you can plant it. That goes and helps with reforestation initiatives. But to go back to the point about attracting capital into that particular sector, for instance, nature-based solutions, which don't really have an inherent return, let's say, or obvious financial return, the key question here then becomes, okay, how do we integrate or couple these types of investments into, let's say, company ESG initiatives, ESG reporting, and whether that can link indirectly to also attracting capital. And then I guess this also comes from where the lenders have their own ESG targets that they think they can meet by doing that.
Thank you. Chirag, what are some of the best practices that the region can learn from other markets globally when it comes to mobilizing private capital for sustainability-focused projects?
I think as a starting point, we need to acknowledge that there's been a lot of progress made to date, right, within the GCC. So rather than constantly comparing the region to, say, Europe or the West, I think as a starting point, it's important to acknowledge the progress made, whether that's in some of the more nascent aspects of the market, carbon markets, transition, some of the investments being made across the renewable technologies. And I think that's really a testament to the sort of creative nature, the entrepreneurial nature of the market that we're operating in. And I think that's a really good, fantastic sort of starting point when it comes to supporting, advising on, financing some of these really, really impressive opportunities. I think just from a numbers perspective, we've seen about 46, nearly $50 billion of sustainable finance issued across the loan and bond markets just this year, and that's sort of similar numbers to what was achieved in the full year for 2023. I think there's been progress made both on the regs and non-regulatory side. In Saudi, we've seen the Capital Market Authority provide really impressive guidance with regards to the green bond and sukuk market. The Kingdom's also issued their own green finance framework earlier this year, again, lending to my earlier point around supporting those parameters that institutional investors need. Within the UAE, again, we've seen the central bank provide more supporting taxonomies, and that's been the case right across some of the other countries as well, within the GCC as well. I think what's important, if you do compare, and if you do try to learn from some of the other markets, outside of the GCC, is very much around some of the pressures that you face in the Western markets, whether that's stakeholder pressure, whether that's shareholder pressure. We don't have the same level of call it scrutiny or level of requirements. It's a different sort of beast when it comes to those aspects, when it comes to the GCC and the drivers and the motivations behind some of the businesses that we're involved in. So I think it's important to dissect what's been done well, for example, in Europe. It's still a credit-driven, price-driven market. And again, we've touched upon some of the cost aspects with rolling out some of these new technologies at scale. I think data is a really, really important point, not just for the GCC, but I think that's something that needs to be properly factored in order to support many of these opportunities. And as I said, some of these aspects, some of these markets are still very much in their infancy. So how do we support transition finance? How do we support nature-based solutions? So there's a lot to learn, but equally I want to acknowledge the fact that there's been a lot of progress made within the region itself.
I agree. There is a lot that has been done and definitely more to be done. Pavel, there are a lot of sustainability-linked, focused mega projects in the region. What factors make a project attractive or challenging for those private investors?
Sure, yeah, no, you're absolutely right. I think there's, we definitely have loads of very interesting projects across the GCC area. I think what makes them really attractive to private investors is the fact that most of these initiatives are supported by the government, and that really comes with some of the perks that other investment opportunities may not give them. So, for example, if we think about, some capital allowance, which, not necessarily are exclusive to sustainable mega projects, but certainly specific government regulations or frameworks that will come in time to allow for this opportunity to grow, and some breakup benefits they can get, that investors can get. But this is probably not the only thing that makes that really exciting opportunity for private capital investors. It's probably more about the opportunity to support the national goal of changing the environment around us. Some opportunities come with specific ESG impact, and I think some of the corporates and private individuals want to be part of this change. They want to, see that their investment is actually changing the environment around them and enabling new growth, new phase in the sustainably backed projects. And those investors who are looking for their sustainability may sort of for some time disregard that they can't calculate the return on investment on day one, because those will accumulate through time. And actually, you can't really see in the future what ESG impact, the sustainability impact will make, and then how their ROI will grow over time. Because when we look back, what we can see is some of these major projects have never even existed before. This area has seen such wonderful growth. And that's really wonderful. And it's quite interesting and gives us opportunity for people to be part of the story.
Thank you for that. And Noor, the last question of the panel to you. What's the credit market outlook for the region, and what are the key metrics or the data trends that indicate that the region is ready to invest in large-scale, projects, let's say hydrogen, transportation, desalination, energy storage?
Well, the region is, I think, very well positioned for this large-scale infrastructure projects and public-private partnerships. I think we live all in the UAE here, or in the region, the GCC in particular, where there's ample fiscal buffers to really empower or finance, in reality, whether those projects, whether directly or indirectly, whether public-private partnerships, and make all of those initiatives and commitments attainable, let's say. I think could be more done to enhance the reputation of the overall region from an environmental point of view, to have kind of a public-public partnerships as well, kind of the governments working together directly through financing projects in other regions that are less capable of having initiatives and to finance those SMEs or those projects that could really reduce the footprint and motivate those governments to really commit to their net zero 2050s or so, as well as basically through the development arms or the development funds of the GCC countries to really have some investments in countries in the region to take this overall region, like my colleagues has mentioned earlier, as in Europe, to have a kind of a broad commitment in the region towards better sustainability targets and more commitments toward decarbonization.
Thank you. Thank you for the very insightful session, and I hope everyone, you learned something, you found this insightful, and thank you once again for attending. Thank you all.